Hey everyone, welcome to another episode of Wise Up, a money podcast made by and for Gens Y and Z. Today, I'm very happy to have Dr. Vinay Utham, but he will get mad at me if I call him doctor, so we're not going to do that today. So, Vinay, thank you so much for taking the time. I really appreciate it. So how are you doing today?
I'm doing all right. I'm doing completely fine. Waiting for the weekend, planning to meet some friends up who I haven't seen for a long time. So that's always nice to make some plans like those. But if my boss is listening to this, I did work today. Yeah. So it's 6 o'clock. So right now I've stopped. Yeah. But no, overall I'm doing good. How are you? I hope you're doing well as well.
I am doing well. It's a lovely day here in Northeast Florida. No complaints.
Wow. I was in Florida about 5 years back. Loved it. Loved the place. I should probably come check it out again.
Absolutely. I mean, where in Florida were you visiting?
So I went to Jacksonville, but there was a conference that I had to go there. But the thing is, my only regret is the fact I didn't have enough time to visit Miami. But then again, I kind of made up for it by going to Boston. So it was all right. So my uncle lives in Boston, so they say that it's okay. Yeah. So
you did fun. I mean, I'm here in Jacksonville, so Oh,
all right. No, actually, to be honest with you, I enjoyed Jacksonville. I think people were hyping Miami up to me a lot, and I was like, well, okay. It's
Miami. I've also spent some time there. Miami's a very big metropolitan city. Jacksonville's more subdued,
and that's the way
appreciate.
I like. I actually like it as well. Yeah, I like it if it's calm and it's. I actually met some very nice people in my 4 days. My hotel, the people at the hotel, and I'd ordered some cab service as well. And I think people were very nice. It was a very chill environment. I enjoyed it.
I have not had any problems after moving here. But you are in London, correct?
Yes, that is correct. I mean, to be honest, I'm kind of more on the outskirts of London. We call it the county is basically Middlesex. My friends make fun of me sometimes when I say I'm in London. They're like, "You're not exactly in London unless you're in central London." It's always a bit of a banter between each other, but because my friends actually live in around central London, so they always say you live too far off. And in Game of Thrones, as a Game of Thrones reference, they call me the wildlings beyond the that's what they always refer me to as. And so we always have fun over there. But to be honest with you, so I live closer to Heathrow Airport, kind of like on the outskirts of London. Yeah, where I work near. I live near the place where I work, so it's been that.
So it works out. No, this reminds me of the arguments I had with people where I used to say I was from Los Angeles. Like, you're not from LA, you're from the Valley. And
so my pain fine. Now. You understand my pain.
I understand your pain. I can't say I'm from LA for people who are from LA because then they get mad at me.
Yeah.
But no, absolutely. So just, you have an impressive resume as is. So as I'm not going to call you doctor, but you are a PhD in finance. You are a PhD in finance. I believe you're also a lecturer at the University of Brunel in London in finance and corporate governance.
Yeah.
You're a CFA level 2, if I remember correctly. So
I'm currently in preparation for my level 3 examination, which I think it's about. I'm giving the February one, so one more step to go. I keep looking at the CFA videos and they say, finish this exam and you get your life back. And I'm like, well, that would be a nice thing, it's, but because after level 2, I was like, I thought my family would disown me because it was the kind of stress levels that come with it. So I can't wait to get things done, to be honest with you, get this over with. Yeah.
That sounds familiar to passing licensing exams for finance. Yeah, that sounds about right. Oh yeah. And you are also a contributor to Seeking Alpha. For those who don't know, it's one of the bigger investment advice kind of financial
It's an investment platform. Yeah, it's like a contribution platform. Where it's mostly catering to individual investors. But having said that, there are a few investment managers who regularly contribute as well. So it's been fun. It's been fun. It's both contribution as well as learning from, because the comments you get are also very valuable as well. So it's a learning process over there as well. It's been fun. Yeah.
Oh, absolutely. So what got you into the world of, I'll start with just finance. We'll get into academia later. What got you into finance?
So it's actually very, it's a very funny story in my head, just because I told you my dad's a doctor. And but the thing is, growing up, so I'm actually a qualified mechanical engineer. I did my undergraduate in engineering back in, I graduated in 2012. So basically, as I was doing my engineering in my second and third years, which is like I was 19, 20 years old, I used to see my dad invest in stocks. And he used to be more of a long-term stock picker, and I call it the buy and forget strategy, which, he calls it a strategy. I'm not so sure, but to be honest with you, he used to invest in all these mega cap stocks in India, and I used to be very intrigued by it, and so I just kind of picked it up from there. So I used to go in debate competitions and in my undergraduate days and so on. So I kind of, whatever money, little prize money you win, I kind of saved it up and started to invest in the Indian stock markets at that time. And, slowly learning. It was a learning process, because the one advice that my dad gave me was no book would teach you how to properly invest. Like, you got to get your hands dirty. You got to go in and start investing, even if it's little bit amounts. And also the second rule that I always tell, my students keep asking, what is a top tip? I said, please be patient. That's it's not for the faint-hearted. So it's something that my dad always used to say. So that's how I picked it up essentially. And I love numbers. I have no idea why. Just I'm crazy obsessed with numbers. It's like checking out financial statements and looking at the various comparison measures and so on, and like even financial modeling and so on. So the combination of my love for numbers as well as the inspiration I gained from my dad, I think that got me into the stock markets. And to be honest, once I got into that's how I entered the world of finance, through the stock markets. It was nothing to do with the traditional balance sheet and income statement and the accounting metrics. It was just there's stocks, there's companies that are public, and you get to invest in them, you get to own them, and I'm like, this is fun. Yeah. That's how I started, obviously.
The interviews that I've had, that seems to be the way that most people got involved in this world. While we have, let's call it the traditional route, that people had an interest in business or finance, they got their degrees in economics or business or finance, and they went from there up the corporate ladder. It seems like most of us who talk about finance for a living are passionate about it because we accidentally discovered it. And you're looking at our parents and going, wait, you're investing in what? How does this work?
Yeah.
What's a 401k? What do you mean? What does that do?
I could not agree. I think you summed it up beautifully. I mean, I love the word you used, accidentally, which is exactly what it was. Stumbled upon. Like that. I always say,
That's precisely what it is. I mean, so the first degree, my undergraduate degree, is in political science.
Yeah.
It had nothing to do with finance. Nothing. I was going to be an attorney. I was staring directly into the skid of being a nice Jewish boy. I was going to be an attorney. My sister's a doctor. It was great. We had it figured out, but it didn't work out that way. And the way that I got into finance, completely by accident. It was my freshman year of a high school, not even college.
Yeah.
I had a guy sitting next to me who was a senior. I was a freshman, and he would not, for the life of him, shut up about Warren Buffett.
Oh my! Yeah,
it was. It wasn't even a business elective. It was a philosophy class, but he would not stop talking about Warren Buffett. And one day I look, I'm like, bro, can you just stop? And he goes, listen, come to the meeting of our stock market club. It's on Tuesdays. Just come, and I'll stop talking about it. I was like, you know what? If it makes you stop talking about it, I will come to the club. And that's what happened. I canceled the club.
To be honest with you, I think Warren Buffett, a lot of people associated with the philosophy anyway. I think given his quotes, I'm not going to lie. I sometimes wonder, they call him the Wizard of Omaha and so on. I'm like, are you really an investor or are you just a philosopher based on his, if you read his investor letters and if you learn what he speaks about, if you listen to what he speaks about his AGM, sounds more of a philosopher, but man's a god. I mean, it's not even human anymore.
In this space, absolutely. Yeah, the Oracle of Omaha. Yeah. He's got this aura about him. You can't.
I cannot believe I just insulted Warren Buffett by calling him Wizard of Omaha. I meant to say Oracle of Omaha. You can clearly see I do know about finance, Gabriel. I do know about finance. I promise you. I'm just excited to be here. I keep forgetting the words. That's all it is. That's all it is.
Listen, I'm sure that Warren will forgive you.
Oh my goodness.
Hopefully. Please don't ban us, Warren. You have the money. we apologize.
Oh my God! Suddenly I'm going to get comments on Seeking Alpha. Isn't this the guy who called him the Wizard of Omaha? Like, oh,
yeah, so we got into this world accidentally.
Yeah.
Like it was not supposed to happen. We had different plans, but then we looked at finance like, oh, that's interesting.
Yeah.
I wonder how this works. And this is what was happening in 2017, 2018. That was when Tesla was first really blowing up.
Yeah.
And then Overstock.com was getting into blockchain. And I was like, what is going on?
Yeah, I know. Right?
I don't know what is happening here. What do you mean there's a stock split happening and their P to E ratios are going up and volume is going insane? What does all of this mean? And it was, so no, the traditional route of getting into understanding balance sheets and corporate metrics and governance. No. Why is the stock going up 8% today? What is happening?
Yeah, I mean, it's like green and red, It's like green and red, and I'm like, oh, this is fun. This is cool. Like, but
it's like staring at traffic lights.
I know, exactly. I was like, where's the orange? Where's the orange? And then you hear terms like, analysts saying about buy, hold, sell. And I'm like, hold, what's going on here? Like, it seems like...
why am I holding it? Where do I take it?
Yeah, exactly. What do you mean by holding it? Like, no, but it's also very intriguing. Something that is a paper transaction is making all this, it's worth today what it is worth. Like, you can't even amount how much trillions of dollars worth of stocks are being traded across the world. It's really intriguing to know that all of this is done in paper digital electronic transactions. It's just very intriguing. And at that time you were like, oh wow, this is very, very cool. And then you get into it and then you just fall in love with it. I think actually, to be honest, either you fall in love with it or you don't. It's one of those cases. Yeah.
You either love it or you hate it. It's one of the two.
Exactly. There is no middle ground. There is no hold there. It's either buy or sell. That's it. Like, there is no hold there. No neutral.
There is no market perform. It's just
it's either outperform or it goes in the bin. It's as good as that. It's as easy as that.
It's as simple as that. And depending on the day, you could love it and then hate it. I mean, when Fed Chair Powell last week was talking, everyone was like, "Cool, the markets are fine. We've had a rally the last few weeks, and then suddenly the Dow loses 1,000 points, and everyone's like, "What just happened?"
Well, exactly. I swear to God, I was on a phone call at that time at my university. I was doing a meeting at that time, and then I just checked my phone, and I'm like, well, I mean, because before the pre-market, it was all in the green. I said, okay, I'm pretty sure Powell will mess this up. I'm 100% sure because I just knew it was coming. The only thing is I didn't know it was going to be that bad. It was just I looked at my phone and I'm like, well, this is fun. Like, whatever happened, like, when at that time, I wish there was an orange light because it just went from green to just red, blood red in no time. Like,
it was just bleeding everywhere. I remember looking at the chart because, again, I believe I had an interview last week at roughly this time. It was, lunchtime Eastern time. Yeah. And markets were a little green, slightly red. They were sideways.
Yeah.
But then Chair Powell starts talking and it goes off a cliff. And I'm sitting going, oh, that's fantastic.
Yeah. Oh my God. But to be honest, if you're a long-term investor, yeah, sure, you would be happy to do that. But I can, at that moment in time, 1,000-point drop, it's just like, you're just shocked to the core. You're wondering. And also his speech was 8 minutes. He did more damage in 8 minutes than what he's been doing in all these months with his, first you call inflation transitory, then you say it's not transitory. All of the damage he did in across. To be honest with you, I respect Jerome Powell. Don't get me wrong. I think what he's doing right, but clearly I did not expect, for him to in 8 minutes to do that kind of damage. I think,
He has a very tough job because he's also competing with Treasury Secretary Janet Yellen.
Yeah.
And the Biden administration is trying to all set policy, set rhetoric about policy.
And then you've got people like Senator Warren who are blaming him left, right, and center, calling it, he's going to be the single doomsday of the recession. He's going to be the recession carrier. I don't even know what nicknames he gets every day. And I'm like, my goodness, you have a tough job. It's.
I would not want your job.
I do not want your job. Like he was, I believe he was a former private equity manager. I was like, I think that job was less stressful than this. Like,
and private equity right now is getting hammered too.
Oh my God, yeah. I mean, to be honest,
it's not the private equity. It's easy.
It's across the board. But I do think that's because of to be honest with you, I think given the fact M&A cycle has taken a breather, I think private equity was unless you are one of those private equity managers who was invested in energy, because wow, I mean, that's something else over there with what's happening with oil and energy.
Energy was the only asset like into May that was outperforming. Gold was down, crypto was down, the markets were down, and then energy was up like 30-40% on the year. And I was like, what is going on?
I remember seeing this interview. I think it was Ruchir Sharma. I think he came on CNBC and he was calling it the trade of the decade. And I'm like, are you really sure it's going to be, I think we should probably, like, given the fact that everybody's going environmental, I'm not sure about the trade-off, but I will tell you one thing though. I do agree with some of the points that most analysts and experts make, which is you still need your big oil even now, even as we transition to electric vehicles and and renewable energy, because you can't. I don't think it's a stop-start button. I mean, you got to transition it gradually. So I understand what this, but trade of the decade, I'm not so sure. I wouldn't call it that.
I mean, that really depends how we look at it.
Yeah,
you are right, absolutely. But I believe this was also an interview that was done perhaps yesterday, also on CNBC or Bloomberg, discussing what's happening now in the United Kingdom, but also a good portion of Western Europe with energy prices, and the blame being placed on companies that were prioritizing ESG initiatives or environmental sustainability, green initiatives, at the detriment of not having the proper foundations in place or having a transitional period, just going abrupt, we're stopping with oil, coal, gasoline, everything going straight to green without that infrastructure in place.
I'd like to keep it family friendly. That's why. Otherwise, you don't want to read my thoughts. What's going on with what they're doing in the UK and Europe when it comes to transition. I mean, to be honest with you, your transition to renewable energy, all good, but you need to have a plan. I mean, it's just because it's a buzzword and because it sounds very cool doesn't mean I don't understand what people are thinking over in Europe, especially when they decide to go, oh, you know what, we're just going to ban everything without having proper plan, they even shut down nuclear plants, and now you're talking about renewable energy without even, storing enough, or rather planning for the short term or the intermediate as you transition. What did they think? They were going to sleep and wake up the next day and suddenly everything will be green. I don't really, it's something that having been paid, I'm one of the victims of this because the electricity bills are sky high here. I do think that UK is not as bad as Europe, the rest of Europe, especially the likes of Germany, because with what's happening with the Russia-Ukraine conflict. And if you've read today, the Nord Stream pipeline again being shut down as part of maintenance. There's an oil leak apparently, so they're shutting it down. But I think compared to even though UK is not as bad, it's still bad in terms of the energy crisis. I think the planning is just horrible. I have no words to describe that.
Yeah, I mean, so as an American, I can only rely on what I'm seeing from my other European colleagues that are in the space who are posting about, pictures of their electricity bills. People who are posting about what small businesses are dealing with, how their energy costs have gone from £19,000 to £55,000, and how energy costs alone might put them out of business. Yeah. And
can you imagine?
That is astonishing to me.
There are pubs that are actually planning to shut down because they can't pay the energy bills. I mean, that's a huge. I mean, pubs are one of the biggest service industries in the UK, and even they are now coming under pressure because of the energy price increases. And you've got, I've had to already, my energy supplier changed automatically because the one I was on went bankrupt. And just out of the blue, they got a message saying, oh yeah, by the way, we're taking over because your supplier is bankrupt. The good thing was they did the transition went smoothly, but it could have gone either way. I mean, it's just, I have no words to describe the frustration, and kind of, to be frankly saying, I think it's just plain stupid to think about, oh, let's just move green just like that. Like, what is this? Everybody thought they were magicians overnight. Apparently, I didn't.
Yeah, they thought they were looking at traffic lights to go from red to green instantaneously.
Snap a button, and then you're like, oh, you know what? Here we go, green world. What?
It's great. We won. Yeah, we did it, guys.
Yeah. Look around you. It's all green now. Like, it's all green energy. And then they woke up and realized, oh, it was a dream. Oh my!
They were watching How the Grinch Stole Christmas. That they were going to wake up and they were going to sit around the nuclear plants and sing songs about how everything is green already.
And the renewable energy elves were doing the work overnight, apparently, where you make the transition. Oh, I cannot. It's just absolutely frustrating as a resident, and at the same time, I feel the pain for a lot of the households as well. It's just every day you read news. I mean, it's partly responsible for the inflation as well. It's just double-digit inflation is not something you want to see. It's.
Absolutely. I can only imagine the angst, that exists right now for British citizens, because here in America, we were getting mad when inflation hit 9.1%.
Yeah.
But I remember still getting the Financial Times from Britain where a few weeks ago it hit over 10%.
Oh, it's 10.1 right now. And then some Citigroup analysts have already predicted
21.
18%.
Yeah, 18%.
18 to 21.
15%. Yeah. I talked about that a couple of weeks ago where we thought things are bad here and people were pissed.
Oh.
Here, I was like, guys, look around. It can get so much worse. Count your blessings.
Yeah.
I say this lovingly. I'm not saying it's a good thing we have inflation.
No, of course. Yeah.
Cooled off to 8.5%. But
but I think Powell's doing a great job. I honestly think Jerome Powell's doing a great job overall. I know we initially we were I was bantering about him, but I do think that given the circumstances, I think he's doing exactly what I got to give credit to. I keep talking about it on my podcast as well, that you got to be patient with the guy. I think he's got a strategy. He single-handedly, him and his team actually helped the US move through the initial early days of the pandemic. And I think I'm not saying it was a smooth ride. Obviously, they had some policy missteps by calling inflation transitory and expecting it to be temporary. And now you have you had a 9.1% inflation and 40-year high and so on. But I think he's trying to right the ship. And I think overall, I do think that he will achieve his target. May not be a soft landing, might be a little bit of bumpy landing. If I call it, but I think I think he'll get the ship. He'll right the ship, I think, eventually.
I think he's trying. Yeah, and that is all I can give him credit for, because I think people forget is that this is a voted on position. Yeah. Where he is placed into this.
By the way, Gabriel, is it okay if we pause for a bit? Because I just need to charge my laptop. I just need to bring my laptop charger. Is that okay?
Sure, absolutely. Yeah. We can put a quick hold on it.
I'll just bring my charger on. Sorry about that.
Absolutely. Yeah. No, not a problem.
It's a classic academic mistake, as an academic, you just talk and realize that your laptop's no charge.
That it's about to die, and you're like, wait, no, I'm doing something. Can you not die for 20 more minutes?
You would be surprised as to, I have a PhD and all, but I sometimes don't know the basics of laptop, it can die. It can run out of battery.
It happens. But back to the point about Chair Powell, where his rhetoric, I think, going back to the background political science, is the fact that he was also trying to stay in his position.
Yeah.
Because if he doesn't say the right things, if he doesn't do the right things, he can blame other forces. If he doesn't say the right things, he's out of a job tomorrow.
Yeah, 100%.
Which, again, if he has a background in private equity, fine, he can land on his feet. But if he's also done a bad job, who knows if he'll get another job, so to speak.
Yeah, exactly.
I don't like the shifts in rhetoric. And again, I know that he's not fully to blame for it, but the whole inflation being transitory.
Yeah.
I don't think we should have been calling it that. And now he's even gone away from the soft landing. He's now calling his aims a growth recession.
Yes.
Which is a paradox I'm trying to work around.
Same here. I heard that and I'm like, surely you didn't mean that in your, when you said it. Because
I need to reach into my thesaurus and my dictionary because I don't think I'm understanding what you're saying.
I don't understand how growth and contraction can be used in the same, like together as one phrase. It's something
that's probably I missed because a recession is a consecutive.
You could. Those are the moments when you just, when I just wonder, these guys should just keep it simple English and just say slow down. That would have been nice, wouldn't it? It was, instead of calling it fancy words like growth, recession. I'm sure that's what he meant. What he probably meant is like, you guys, we're not going to have a recession. We're just going to have an economic slowdown. And then, it won't get to a point of 2007 or 08 and then move on. He could have said that. That's his words, done. Growth, recession, everybody's scratching their heads. I'm like, so what does that mean exactly? Again,
now we're waiting on the next September meeting of the Fed going, wait, so what is going to happen? Are we doing another jumbo rate hike? Yes.
Yeah.
At this point, it looks like that's going to happen. It looks like it,
yeah. Because I think, but overall, I do feel like, I think, and you got a lot of comments from the other Fed officials as well, like Neil Kashkari and Bullard as well, James Bullard as well, saying about these things, about the whole, saying, the rhetoric remains the same, like telling the markets not to party. Like, what on earth? Why on earth are you partying? I mean, it doesn't make any sense. And they dismissed off. I'll tell you one thing. I'll give Chair Powell the credit for one thing. He basically came out and sent a very strong message to the market saying, we are not pivoting. In case you even had the slightest inclination towards saying that we're just going to move on quickly, that's not happening. And to be honest, to be fair with you, I think the way the markets were partying, it looked a little scary to me. Like as to, because I'm in the camp that reckons that we will not get a recession in the US. I'm in the camp. I'm a firm believer of the fact that, yes, there will be a slowdown. There will be an economic slowdown, but not to a point of deep recession or deep contraction. Having said that, I still don't think that it's going to be a smooth sailing. I think there is going to be turbulence. Even when you look at the unemployment metrics and so on, I don't think it'll get to a point of absolute chaos and panic. But I don't think it'll stay strong either. The job market won't stay strong either. So I'm kind of in that camp, and based on that, but the markets were partying as if, oh yeah, we're going to get a sudden recession. And the Fed's just going to pivot just like that, and everything's going to be good. And I'm thinking to myself, I don't think that's necessarily the case. I mean, Bed Bath & Beyond was a classic example of that particular sentiment. And I'm thinking to myself, did we just rewind back time to March 2020 when everything it was actually Jan 2021, not even March 2020. The meme stocks came in with GameStop was in Jan 2021. Yeah. So did we rewind time, go back in time?
We might have, but
for a temporary being, and I like the fact that Powell Chair Powell came and said, "I'm going to crush that. I am not going to let you have another party." Yeah, it's
in 8 minutes. I will make it as abundantly clear as I can. We are not pivoting.
No,
we are not done pivoting. And I appreciated that. I really did, because that bear market rally was extremely strong with diminished volume. People forget that in summer months trading volume goes down, so it was a very strong resurgence on minimal volume.
That's the other thing that I think people didn't really take into consideration, is the fact that the volumes were low anyway. Everybody's on holiday. I don't understand on what basis you can call it everything's going to be fine, And also traditionally, historically, September is the worst month for markets. So I can't wait to see in a month where the Fed's going to hike again. And historically, there's the behavioral sentiment that, okay, September has been worse. It's a self-fulfilling prophecy. And now you have the Fed going to, you ramp up the rate hikes again. I can't wait to see what. I mean, I'm going to switch off my portfolio probably for a month exactly.
No, but you're right. The September effect. I've talked about this, where historically September is the worst pouring month on record. Every year, almost September is the worst.
Yeah.
People get back from holiday and go, "Wait, we were still invested in that? No, sell everything."
No, because the funny part is, when I started my podcast, it was basically in September I started, and the first episode was on the September curse. And here I am thinking to myself, well, it's that time of the year again.
What did I get myself into starting now?
I know. Yeah, I was like, what was I thinking? Could have given it some time.
I could have at least waited a bit until things are done. I mean, what am I doing here? But no, that resurgence has been amazing to see. But now that things have cooled off, and that's where I'm kind of sitting, where I looked at it and gone, if the end of August was that bad, it's September historically even worse. We could see some very fun lows in August.
I do still think we'll probably recover towards the end of the year because it would have been so oversold anyway. But September, I completely agree with you. We're in for a very bumpy ride, and it's like it's going to be very painful if I'm not wrong.
It will be painful, and I guess you and I diverge on where our projections from there go, because I agree more with Dr. Doom, Nouriel Roubini. And Jeremy Grantham more recently, who has also come out and said we have 50% more to go. I don't know if we have 50% from here to go. I mean, my projections are set in stone. I made these a few months ago where I said I think the S&P bottoms at around, I think I said 2,400.
2,400, okay,
It's set in stone. I'm not changing comments. I'm not going to be revisionist, say that I got it right. If I get it wrong, I get it wrong.
No. I mean, listen, it's called an estimate, right? Nobody can blame you for making an estimate kind of thing. It's a projection it's a personal projection based on your analysis that you're making. And to be honest with you, there are a lot of market experts who have said that it's. I think Mike Wilson had a 3,600 or 3,200 was the target end of year, Morgan Stanley. But I tend to side more with Tom Lee from Fundstrat. I tend to be along the lines of that. I'm not saying it'll end at 4,800. I'm not making any projections, but I do think that eventually, I think we will end up in a slightly better position than what we will be going through in September. At least that's what my belief is. I mean, to be honest with you, Gabriel, I'm a very long-term investor. For me, all this volatility in the short term doesn't really bother much. I mean, don't get me wrong. There are some stocks in my in the portfolio which I have targeted specifically for short to medium term, but those tend to be very rare. It tends to be one or two. The others are all in. So there's a lot of pain right now. There's a lot of blood in the street. A lot of it is mine, not some. A lot of it is mine. But hey, when you have a long-term perspective, it's one of those cases, isn't
it? It happens. So you brought up your kind of long-term purview. So being also a writer for Seeking Alpha. So what is your strategy? So when you are approaching a potential investment, what are you looking for? What are financial positions, or I guess in terms of financial health, you're looking for their profits, revenues, you're looking what entices you about a potential investment?
Yeah, so essentially, I'll tell you, obviously earnings performance matters, and the ability to consistently perform and has the fundamental or the structural story. So it's all about story at the end of the day regarding a company, right? You have a story surrounding with it, the environment it operates in, the macro environment it operates in, as well as the fundamentals of it. And those are like a little characters that tell you the full picture of the particular company. And so for me, it's a matter of, as long as the structurally in the environment that the company operates in the long run, it remains stable and or there's a lot of growth potential. At the same time, if the company is consistently performing, it could have a couple of bad quarters. But at the end of the day, if the efforts of the company are towards that long-term vision or the long-term goals, and that is in line with my projections for the industry that it operates in, that's one factor that I normally look for. The second bit is I'm a firm believer of solid management and excellent governance. Not good governance, excellent corporate governance is definitely those two parameters you can fit into that whole governance angle. Because my research is activist hedge funds. So I do look at shareholder activism. For me, it's like the corporate governance is a huge criteria to look at the company. And I also like CEOs who in their earnings call are very clear cut, and they actually give you elaborate but proper answers to analyst questions. So, for instance, I don't like, everything's great. Okay, moving on to the next question. I don't care. There's always a red flag there. Because I actually listen to the transcripts as well. So I look at the tone, I look at the sentiment, I look at the kind of the way they approach analyst questions and so on. And also, so for me, the CEO, CFO, and the whole management team, how they approach is a huge requirement. Because in the long run, they're the ones who are driving the company towards that vision. So all the numbers you can create. Short-term volatility will be there, but as long as you're in line with the macro trends of your industry that you're working in, and you're trying to be a leader, or you're going to perform very well in the company, that's definitely something to do. And the last bit, listen, long-term investment also requires valuation. Okay, at the end of the day, it's if I see a 10% return based on my projections for a long term, I'm not interested in it. In terms of if there's not enough upside for me, if it's like, so let me put it this way: if it's a fairly valued stock or an overvalued stock, right now I normally wait for a pullback, because there tends to be some form of correction, and then I buy it. And then I initiate, because even with a 3 to 5 year perspective, I look at it like, if it's overvalued in the short run, then I'm because the upside then becomes minimal. So then I tend to take a step back. I put it in the watch list. I'm a very patient guy when it comes to it. I don't need to buy it at the just of things like that. Valuation matters even if you're a long-term investor, especially in these trends. That is, the other bit I have to say is, when sometimes people confuse long-term investing with the fact that we are not purview to the current market environment. We don't care in terms of if we have, I don't care in terms of, I'm not going to say I don't care about in terms of my existing investments. But at the same time, if I'm going to initiate a position, then if there is a potential that the entire thing is going to crumble and I get it for the cheap, why not? I'd rather wait, because my horizon is definitely a long-term horizon. So I'm not looking to buy today, sell tomorrow. So if I have to wait, I wait. If I believe that it's overvalued as per my projections, as per my price targets, then I just simply wait it out. But those are the approaches that I normally take in a 3 to 5 year horizon, stocks for a 3 to 5 year horizon. Short-term pain is not a problem. But at the same time, that is not to say valuation can be just dismissed.
Yeah, the point of excellent governance and management, it sounds like you have also read Warren Buffett's essays that were released in 1997.
No, actually, it's nothing to do with. It doesn't come from. I just think that good governance is what leads to great companies, and I know it sounds like a bit of a philosophical statement. Complete goes against what It's whatever I said. I should probably take it all back at the start of the interview, isn't it? But but that is not to say. Look, I like Buffett. I like Warren Buffett. I think he is growing up. In India as well, he used to be extremely popular amongst everybody. In the US, when you look at US stocks, in India at that time, it was all Warren Buffett. So value investing, long-term investing, and so you normally associate with it. But for me, it comes from the fact, not just based on my research, but I just think that it's just common sense at the end of the day. Good governance, great management builds great companies in the long run. And most of the companies that I've interested in, or I've talked about or written about on Seeking Alpha, they tend to have good governance. And those who don't, even if I've invested, I've always been very open about the fact that I have no idea about the strategy, and if it doesn't about what the management's doing. For instance, General Motors, just to give you an example, I'd written a piece on it and I talked about it on the podcast as well, about how their EV strategy, it seems to be a lot more about a little bit more talk and less of action, so to speak. They've been talking about a lot of things about what we want to do, but are they going to do it? I'm not quite sure about that. So I hold a position in GM, just as a disclaimer, but my belief in the company is slowly starting to subside a bit. So until there is something dramatically shifts and they actually reach their, let's say, 12-month targets on whatever they're going to do, like they're going to launch the Silverado in next year. They're talking about, they're talking about the other EV models that's coming in, launching next year, so on. So for me, those little things matter, because at the end of the day, if you're going to take on the electric vehicle industry, which is the future, then you better get your foundation right rather than making all this big talk. So it's for me that's just an example of how I was critical of the management, simply because enough talk, let's have some action. You can be humble, it's okay. It's that's on the other hand, Palo Alto Networks cybersecurity leader, I wrote a piece very recently, and I talked about it last week as well on the podcast. For me, valuation was a problem with Palo Alto. I did say that pull back, wait for a pullback, and then you go for it. But at the same time, management is spectacular. I love Nikesh Arora, and I think the way, and he's very candid. If you actually listen to the earnings call, he's very candid, and he even calls out the analysts on one occasion. He's like, "What do you want to do? You guys are never satisfied with whatever I do." Because they did something, they say something, and he achieved it, and now they're questioning on it. And he's like, "What do you want me to do? I mean, do you see the macro environment? Do you see where we are?" So he's not like, "Oh, we're going to do great things, and we're going to do amazing things." It's like so a tale of contrasting CEOs is what I'd say, and the same goes with Dara Khosrowshahi of Uber. I respect the man. I like the guy. I think what he's done compared to his predecessor, at least, I think I think you've got a stable hand at that firm as well. So I think these are some of the examples I can give you about what I mean by excellent governance or kind of excellent management.
It sounds very much like how I try to look at things, where it's a hybrid approach, because it's something that I don't know if I want to use the word decried, but been a little upset about, is the almost dogmatic approach of time in the market over timing the market.
Correct.
Go, listen, on a very micro scale of day trading, I agree with you.
Yeah.
But why can't I say something is overvalued? Or that, I think the markets are going to slow down or pull back this month, and right now might not be the best buying opportunity. Why can't I still have a long-term mindset, but in the short term, next few weeks, months, say, you know what, I'll wait for a good buying opportunity. Why can't I say that? And it's always a fight of, no, just keep, dollar cost averaging, keep buying the dip. I go, well, why? If we can arm people with the tools of knowing, okay, with 100% certainty, given that even you and I have two different expectations of where the markets go, you can't know with certainty.
Yeah.
But if we think that, things aren't going to be good right now, why can't we suggest that people wait, or at least consider waiting before making a purchase?
I mean, you're going to be patient anyway, right? If you have a 3-year horizon or a 5-year horizon, you're patient. That much is under. If you're not patient, you don't have a 5-year horizon. So why not wait? Right?
Yeah, if you're going to wait 20 years to touch your stocks anyway, why can't you wait another month or two? It's not going to kill you. Yeah. What's the problem here? Why can't we do both?
That's the thing. I mean, because even if you take a 12-month, which I believe is a long-term view to an extent, 12 to 24 months. Wait, nothing's going to change. Nothing's going to happen. It'll get a pullback. You get a pullback, you buy. Nobody's asking you not to buy, but it's a great company. I'm going to buy it at these levels. Well, you're at your own peril that time.
Your upside is capped. You've got to worry about why the markets are down 1,000 points today. That is on you.
Yeah,
you want to. Yeah, you take the risk that you are comfortable with taking.
Yeah,
but again, I have much the same viewpoint as you. If it is qualified for long-term capital gains, it's a long-term investment.
Yeah,
that is how I look at things.
Exactly.
Everyone arguing about if you need the money within 5 years. I brought this up last week as well with another guest that I had, where I was like, I'm upset. Why are we telling people that if they need the money within 5 years not to invest it in the market? That's nonsense. If it's in 3 years and you've got long-term capital gains taxes in place and you can sell it for, let's say compounded 35% gain, great. You're going to get 6% in a savings account or money market. What are you complaining about?
Yeah, exactly.
I don't get the reasoning here.
You have absolutely every right to be upset in that regard. If somebody calls at you and it says 12, you know what? Only a certain time period classifies as long-term investment. I'm like, well, 12 months. You're right. But it's 12 months, not what you're thinking. Not 20 years,
12
not 50 years, not until I die and my kids get... No, that's not long-term investment. I mean, that is long-term investment, but that's not the only definition of long-term investment.
Yeah. I agree. No, unless you are... Because then we start nitpicking, like, is it only for the day you retire and you've never touched it before then? Again, the buy and forget. which is, like you said, buy and hold an index fund, and like Warren Buffett said, just put it under the bed and forget about it for 40 years.
Yeah.
Why? Why can't I be more proactive?
Yeah.
And for the average person, the answer is, well, because they're not educated enough. I'm like, well, that's the goal of things like this, to have podcasts, financial literacy courses in schools, to have academia play a better role than scaring people. If we can arm people with the ability to manage their portfolios better than 90% of financial advisors who underperform the market on average, respectfully, this is our industry. I will keep calling it out. We need to do better if people want to have any faith in us. Yeah. And that I think that's why we need better checks and balances, because we still have the vast majority of financial advisors that lose money. And you brought up an interesting point where you said, for your own projections, if it's fairly valued and going to return 10%, you are not interested.
Yeah.
And I think that is fascinating, because I remember in talking to people, in recent years, it was, I got 7% this year. And I was like, that's not a good thing. Like, what do you mean? I'm like, the Dow was up like 9%. The NASDAQ was up like 30. I don't know what you're happy about here. I remember I was an investment analyst, and I was doing 401k reviews for small, medium-sized businesses. And I was seeing, the business was getting an annualized return of 7%, 8%, because they were following those traditional models of having X% in low yield bonds, X% in high yield bonds, X% in precious metals, X% in small, medium, large cap stocks. I'm like, this is diversification for the sake of it, not for the sake of gains. Yeah. Respectfully, this is another issue I have, where if you're just diversifying for the sake of it without still trying to capitalize the reward to risk exchange that you're giving here, you're missing out. Plus, again,
you're preaching to the choir here. You're absolutely speaking to the right person here.
You're getting 8% returns, but you're also paying the advisor. I'm like, I know what my boss is getting paid for you to hold those 401ks with him. It's not chump change, and you're underperforming the market.
Yeah. Why
are you still here? If I could send you an email discreetly telling you to run, I would have by now.
Yeah, exactly.
I don't like it. So now, when you said if it's less than 10% you're running, I go, that's precisely. I am here for this, because of the Dow, the safest, least volatile index, last 30 years, the annual returns around 9%. Not even counting dividends.
Yeah,
most of these Dow 30 stocks have dividend returns of 4 to 5% annually. So overall returns of 13% annuly.
Exactly.
Like, if you're getting less than double-digit returns, you're getting robbed.
Exactly. No, because I got this comment on a piece that I wrote on McDonald's. There was a few time back. Stock was trading about 260. I said, based on my projections, fair value is about 280. And I said, overall, I think it was something around that. When I looked at the percentage terms, it was 8%. And I said, listen, it's 8% return, but which, for some people, I also was very candid. I said, for some people might be good, but in my opinion, I just think a pullback is to be honest with you, luckily I was right, because the stock then pulled back to 230s levels. And I was like, well, you could have got a better opportunity there. But somebody actually commented when I mentioned the article that, what's wrong with 8%? I said, I'm not about to write an entire, do you have all day? Because I can write a book on this. Like, why? And these are exactly the points that you raised. You brought all, you just summed it up beautifully. Like, in terms of, in a nutshell, what I would have said to that particular individual who commented. It's like, sometimes 8% might look good, but if you're still underperforming the market, why bother? Why get out? Like, it's like Kevin O'Leary saying in Shark Tank, 5% doesn't even get me out of the bed. Exactly. That's the same thing. To quote Mr. O'Leary, it's Mr. Wonderful, as he calls himself. It's.
But you're right. That's what it. I enjoy this conversation, because I'm usually yelling at clouds. I'm usually that old man yelling at clouds, where it's like, no, we need to be safe. We need to hold this level bonds and this level bonds, and have some in money market and some in short-term CDs. And I'm like, no, why? What are you doing? Absolutely not. If the market's a non-sentient object, a non-sentient entity called the market, can give you annualized returns of like 12%, why would you pay someone to do worse?
It doesn't
make any sense.
It doesn't make any sense whatsoever.
It absolutely does not. This entire industry needs to be reevaluated, because I think the way that we gauge risk is completely skewed. I really do.
Yeah. No, I think there are experts out there who agree with it, but I think they're in the minority for sure. And so I completely agree with you in the fact that, it is sometimes returns matter, even if you're a long-term view. Sometimes you call it, I'm pretty sure even the Oracle of Omaha, see that I corrected now, even for him it matters as well. I mean, why on earth would he, he's hired the people right now for his succession plans who are doing exactly that. So, you don't get up. The returns do matter. Returns do matter. And sometimes if 8% sounds very good, but it's still underperforming. Relative performance is something that is, I don't think it's fully appreciated by some section of people, I think.
It really, but like you said, I think that goes back to the almost dogmatic shift we have between long-term investing and short-term, meaning like day trading per se, where long-term investors are just buy the dip, buy and hold, leave it alone for 40 years, whatever, just keep buying the market on a monthly basis, automate it, do whatever. And then day traders are like, what's volume, what's momentum, what's RSI? I'm like, can we do both?
Yeah.
But better.
Yeah.
Can we look at what momentum is doing? Again, because people who are just looking at price action, when Fed Chair Powell started talking, were like, wait, but price action was amazing. It was like, well, economic conditions matter.
Yeah.
That is important. Yeah. But at the same time, if you're an investor, if everyone is short the stock and people have to cover, it might go up, sure, but it might pull back immediately after the fact. Yeah. Why can't we look at short-term trends too? Can we do both?
Yes.
Like, why do we have to be so dogmatic of saying timing the market over time of the market is
also nobody can time the market perfectly. There is no such thing as you found the bottom or you found the top. There is no such thing. I mean, it's one of those cases where it all depends on how you see it. And to be honest, this is why cost averaging is important, and this is why you need to check both the technicals and both the short-term trends as well as the long-term economic indicators. And within the company, in a top-down approach, you look at the industry as well, and you look at, okay, in the long run, where is it going? And, it's also very important because long run or long-term, it varies from individual to individual. So I think it's very important that even as financial advisors, it's very important you sit down with the client and you actually ask them what, in your opinion, is long term. Like it's important to come to that because it's a very subjective thing. I mean, for you it could be 3 years, for me it could be 5. I mean, and then in my 3 year calculations, I see it as a 8% return. You do your calculations might in a 5-year horizon, it might be more. And so again, there's a relative understanding that needs to be made here, which I think is missing as well. And I think it's very important that podcasts such as yours educate and kind of awaken the understanding of such metrics because they matter.
Yeah, absolutely. This was a conversation also last week where the analogy that my guest gave was about how it's almost like trying to get healthy or get fit. What that means everything's different people. If you're an athlete, you're playing for London. You're in Chelsea.
Yeah. I'm actually an Arsenal fan, though, so not London. Yeah, even though I live.
You're playing for the Gunners.
Yes,
you have different. You have different athletic plans. Someone who's trying to be a professional swimmer, or just someone who's a dad who wants to play with their kids. Those are all different goals within being healthy and being fit. If we just say we want to be healthy and fit and have a one-size-fits-all approach, we're messing with people. We're not giving them the best possible approach. So I think you're correct, absolutely correct, where we should be sitting down, either as advisors or even as podcasters, and saying, you yourself should know what your risk tolerance is, what your investment horizons are, what your interests are, because mine might be different from yours. So what I'm comfortable doing might be different from what you're comfortable doing. And that conversation is usually so often lost. We turn on Bloomberg, CNBC, Fox News, and go, buy the dip, or we've hit market bottom, or sell, or buy, and Jim Cramer's getting on with about what he's buying.
Oh my
right
God,
now.
Don't even get me started. I don't want to be sued by him, but I think, or I don't want you to be sued by him, but I don't want to even get started on that, man.
We could do a whole episode on
I could. I'm happy to be part of that, even at the risk of getting sued. I think I'm happy to be a part of, anybody who says, what does he say? I'm trying to educate on business television, and I'm like, no, you're not. No, you're not.
No, absolutely not.
Absolutely not trying to educate. Nope.
You are capitalizing on trends and being as boisterous as you can be in those claims.
It's and I don't think he owns up to his mistakes as well. That's very funny.
Not in the slightest.
Yeah.
I mean, I have notes that I've been writing about how often he changes his mind. And I mean, even on Coinbase, oh my Lord, they're being investigated by the SEC. He's like, oh, it's a long time coming. Go, Jim, we have tweets going back to last year. We're talking about how you're a long-term investor and a long-term believer in Coinbase and you think it's going to the moon. Yeah. What do you mean you think that the SEC investigation is a long time coming?
Yeah.
Why didn't you tell us this?
And clearly his definition of, you see the problem, his definition of long time and definition of yours and mine are completely different apparently, because his long time would probably be more than
a few months.
For him would be probably like a day. Like, oh yeah, they said it, I knew it. Like, we could do you're absolutely right. We could do an entire episode, because for me, it's a matter of like, you're not trying to educate. No, you just, you're voicing your opinion. Absolutely. You have every right to do so. But don't call it education. It's just, humility is not bad. It doesn't kill anyone. So.
Humility will not kill him. But see, he is entitled to his opinion. You are correct in that. But the more he gets it wrong and the less willing he is to take responsibility for getting it wrong.
That's the problem.
The less I enjoy him having a platform to voice his opinion.
That's true, yeah.
I think these two things can be true. You can have an opinion, 100%. But I don't want you to air it.
Yeah, 100%. Because that's something. Because even on my part, if I get it wrong, I just raise my hand and I'm like, listen, guys, I was wrong last week. I did not see it happening. I did not see it coming. I did not see the plunge to it. I mean, I knew it would be bad, but I did not expect what. I'm not going to be like, oh, you know what? Long time coming. I knew it. 1,000. I predicted 1,500.
I saw this coming. What do you mean?
I saw this so much. Like,
yeah. See, that's what I said, a few minutes ago. Where my predictions are set in stone. If I'm wrong, I eat crow. I get on camera, I get on LinkedIn and say, you know what, guys, I was wrong. My projections were off. I apologize. I got it wrong.
Yeah. I mean, it's the thing. It's the same. I mean, like I'm telling you right now, like, I do expect, if it doesn't, okay, fair enough. You know what? I got it wrong. That's fine. It's an optimist blunder. That's absolutely fine. It is what it is kind of thing. Yeah.
It's a little bit of integrity. Just say, you know what? I got it wrong.
I think he's done it once in the last. I remember him saying, even then he had to. He tried to play. I remember him saying about PayPal, he got it wrong. He got it spectacularly wrong.
We can go back to clips from 07 or 08 when Bear Stearns was about to plunge.
I remember floating it around. Yeah.
And he was saying, don't pull your money out of Bear Stearns. And then 2 days later, Bear Stearns went bankrupt. Yeah. Everyone's like, what happened, Jim? My money's stuck in a bankrupt company. What now?
I can see on Twitter, I can see the hatred. I can see the hatred so much. And to be honest with you, I don't. If you're not owning up, then it's a big problem. It's
the lack of integrity. That's really, if he was just wrong, I don't think people would have as big of a problem. There'd still be a problem given the massive platform he has, but it wouldn't be as bad of not owning it.
Yeah,
I think it's the lack of integrity that makes the divisiveness around him so strong, and why there's an inverse Kramer ETF now.
I've heard. You know what? I some of my students actually said it when I mentioned the word Jim Cramer. They're like, the first thing that one of my students actually said was, "Oh yeah, he says that I shorted. He says to buy, I short. Yeah. He says to short, I buy." I'm like, huh. So it seems to be catching up in the UK as well. Like,
We could talk about Kramer for a while. Listen, that might be a new Stock Doctor episode for you.
Yeah.
And listen, being cognizant of your time, we'll wrap it up. But to plug your podcast, so it's the Stock Doctor. How often? How frequent is that?
So yeah, it normally it's a weekly podcast. I normally tend to release the episodes either Sunday or sometimes Monday, because if I've got some other commitments during the weekend, I normally tend to push it to Monday. I think once I've done it Tuesday, but that was because of my physical health reasons as well, so I had to kind of postpone it. But normally it comes out around Sunday evenings, and it's a maximum by Monday morning in case I have to edit a few things. But it's a weekly podcast, because normally what happens is I discuss. So there's a segment called Weekly Snapshot. So I have to basically summarize what happened in the last week and take out the one main element. Nowadays, it's all about the Fed, because clearly nothing else is more exciting. I mean, sometimes I feel like, what am I talking about? Oh, I know what I'm talking about, because there's nothing else.
It's the Fed.
It's the Fed. And I have to tell to my, when I'm recording as well, I know I'm like, for the 100th time, this segment will now cover the Fed again. Like, I got to mention that. I got to put it as a disclaimer as well. But normally, no, on a serious note, yeah, I discuss the Indian markets as well. So I normally go, so there's something called a Doctor Goes Home segment because I'm from India. So I discuss the Indian markets, what happened last week and all the major policy changes and major and how it's impacting the markets there. And then there's something called a Doctor Dissects, where I pick a stock for potentially for long term. Sometimes if it's a medium term, I say, oh yeah, medium term. There's like Palo Alto. I did say that the running on a earnings momentum is the one reason, if you're very particular that you have to buy, would probably be the momentum might go in your favor because of the earnings. But turns out it's actually down a bit. So I think, pullback seems to be happening. So so those are the three segments. And so that's why it's a weekly show, because I got to recap the weekly. But I think I should have you on it. I've been meaning to have a special, because Stock Doctor turns 1 actually later this month. So I might just invite you to get your thoughts, because I feel like this has been a one-way traffic here. I love to talk, but I will make sure that my wife keeps saying every time, because I talk so much, she's like, why don't you say, that's probably one of the, subconsciously I started the podcast. It's like, you know what? I want to get it out of my system. Let's start off. Like,
absolutely. Listen, I'd love to be on it. So
absolutely.
We can do a whole extended segment talking about Jim Cramer.
I don't even know. I got to now go back to my drawing board and make a segment name for it. I don't even know where to start, because I don't want to get sued. And I don't want you to be sued either. So
we'll toe that line between slander and libel and professional critique. We will find that line. We'll do our best. You're a doctor. We'll figure it out.
We'll figure things out.
But no, I appreciate you taking the time. It has been a lot of fun. So everyone, thank you also for tuning in. We will be off on Monday in recognition of Labor Day, but we'll be back after that. So thank you for tuning in. Enjoy your weekends, and I will talk to you all on Wednesday. Have a good one. Bye.